every Monday to Friday. This is Peter Lewis's Money Talk.
Money Talk.
Good morning. Welcome to a brand new week of Money Talk from me, Peter Lewis. It's Monday the 15th of January 2024. This is the programme that brings you expert discussion on some of Asia's leading business and finance stories each weekday morning. And thank you for making us one of the top 15 most listened to financial podcasts in Hong Kong, according to statistics from Podstatus. This podcast is sponsored by Surfin Group, which is headquartered in Singapore and offers online financial services to 30 million customers across 10 countries. In today's business and finance headlines, Taiwanese voters have chosen by a comfortable margin the pro-sovereignty Democratic Progressive Party's William Lai as their president in a historic election. Mr. Lai won an unprecedented third consecutive presidential term for his party, winning 40% of the vote. Hou Yu-yi from the Kuomintang, the largest opposition party, had 33% of the vote, and Ko Wen-dai from the smaller Taiwan People's Party attracted 26%. However, the DPP lost its majority in the island's legislature, with the opposition gaining ground, though no one party won the 57 seats needed to control parliament. China's exports rose more than expected in December, but failed to offset an overall decline in 2023 amid a weakening global trade environment. Exports for all of 2023 were $3.4 trillion, down 4.6% from 2022, in the first annual drop since 2016. Exports to the United States endured the steepest plunge in nearly 30 years, with total shipments falling by 13.1% compared to a year earlier. China's consumer price index recorded a softer fall than expected in December. The country recorded an inflation rate of minus 0.3%, compared with 0.5% in November, and also a smaller fall compared with the minus 0.4% expected by economists. Still, China's consumer prices fell for a third straight month, marking their longest streak of decline since 2009. US wholesale inflation declined unexpectedly in December in a sign that price pressures are moderating after a hotter-than-expected consumer price growth report for the same month, released earlier last week. The producer price index, a leading indicator of inflation, decreased by minus 0.1% last month, surpassing economists' expectations for a 0.1% increase. Core PPI, which strips out volatile food and energy prices, remained flat last month. We have a longer show than normal today. First up, I'm joined by Alex Wong, Director at Alex K.Y. Wong Asset Management, and John Schofield, Managing Director of Tempus Investment, to discuss today's top business headlines. Providing a view from mainland China will be Yanan, the Chairman and CEO of Surfin Group, and with an update on the Taiwan election will be Ross Feingold, Director at Caerus Consulting Research in Taipei. And if you want to get in touch with any questions or comments, please go to my website, peterlewismoneytalk.substack.com.
Peter Lewis's Money Talk.
US stocks ended the week higher, making minor gains on Friday. The S&P 500 added 1.8% last week, after rising less than 0.1% on Friday to 4,784, and the index is 1/3% away from reaching the record high it achieved in January 2022. The tech-heavy Nasdaq Composite was just above flat on Friday at 14,973, gaining 3.1% across the 5 sessions. The Dow lost 118 points, or 1/3% to close at 37,593. And for the week, the Dow climbed 1/3%. US Treasuries rallied as an unexpected decline in US wholesale prices in December boosted traders' hopes for interest rate cuts in the first half of the year. The yield on the 2-year notes fell 11 basis points to 4.15%, its lowest level since May. The US dollar index was unchanged over the week. The Japanese yen saw gains of 1/3%, ending the week at 144.9 against the dollar. On the mainland, the dollar was 0.4% firmer against the Chinese yuan over the week at 7.1665 renminbi to the dollar. Gold ended Friday 1% firmer at $2,049 an ounce for a weekly gain of 0.2%. The price of oil increased on Friday after the US and UK launched military strikes against Houthi rebels in Yemen. Brent crude oil climbed 1.1% to settle Friday at $78.29 a barrel, and for the week the international benchmark was down 0.6%. Bitcoin trading volumes surged Thursday and Friday after the first 11 US exchange-traded funds offering direct exposure to the world's largest cryptocurrency made a long-awaited debut on stock exchanges. Bitcoin ended Friday 7% lower and was down 1.4% for the week. Asia-Pacific markets fell Friday, but Japanese stocks bucked the trend to extend their record rally. The Nikkei advanced 1.5% to close at a new 33-year high of 35,577, and it saw gains for the week of 6.6%. And in India, the S&P BSE Sensex climbed 1.2% to close at an all-time high of 72,568 on Friday. Hong Kong stocks, though, logged a second week of declines in the market's worst start to a year since 2016. The Hang Seng Index fell 57 points, that's 0.4%, to 16,245 on Friday, increasing the weekly losses to 1.8%. On the mainland, the CSI 300 of the largest listed stocks in Shanghai and Shenzhen slipped 0.4% to the lowest level since February 2019. That's almost 5 years ago. This morning, the Hang Seng projected to open about 25 points firmer at around about 16,270. And you can get more details on the latest market movements in my daily newsletter at peterlewismoneytalk.substack.com.
Every Monday to Friday, this is Peter Lewis's Money Talk. Peter Lewis's Money Talk.
Much to talk about this morning, so let's crack on with it and welcome our Monday morning guests. We have with us Alex Wong, Director of Alex KY Wong Asset Management. Morning, Alex.
Hi, morning, Peter.
And also joining us, John Schofield, Managing Director of Tempus Investment. Morning to you, John.
Yes, hello, good morning, Peter.
Now, Taiwanese voters have chosen by a comfortable margin the pro-sovereignty Democratic Progressive Party's William Lai as their president in a historic election, cementing a path that looks like it's increasingly divergent from China. Mr. Lai won an unprecedented third consecutive term for his party. He won 40% of the vote. Hou Yu-yi from the Kuomintang, which is the largest opposition party, had 33% of the vote. Ko Wen-dai from the smaller Taiwan People's Party attracted 26%. And it's the first time since Taiwan began holding free and direct presidential elections in 1996 that any party has held power beyond 2 4-year terms. However, the DPP lost its majority in the island's legislature, and although no one party won the 57 seats needed to control Parliament. The DPP secured just 51 of the 113 seats in contention. The KMT won 52 seats, and the TPP secured 8 seats, which may be critical to either party pushing through major legislation. Alex, how are investors and markets, do you think, likely to react to this when trading gets started this morning?
I think would not be too much. This is a result that I think people probably more or less expected. And I think because Taiwan is so tilted towards the semiconductor manufacturing sector, so the index actually may not change too much, because I think the domestic oriented company may have some reaction, but I don't think that is enough to move the overall index. So basically, I think the market actually would not react too much.
John, how do you think things are going to look this morning?
Yes, well, as far as the market's probably not going to react very much. As Alex said, it's pretty much as expected. But I think it's probably pretty good news, really. At least there's something in it, as it were, for China. While the democratic will of the Taiwanese people is still being expressed. I think, as I understand it, sort of domestic issues were also played a role in boosting the vote for the KMT in the legislature. So that's and that. So stable, a reasonably stable government. Although I'm sure there'll be the usual heated rows in the parliament. But on the whole, it's it's a good result, I think.
Does it change at all the trajectory of either China-Taiwan relations or US-China relations as a result of this?
I would say not. It's apart from the fact that the state of the Chinese economy tends to limit what they can do at this stage, I think. I would say it's very much the status quo. Taiwan can continue to move along, and time is on their side, as it were, I think.
Alex, what do you think about that? Beijing cut all communications with Taiwan's government, didn't they, after the DPP came to power in 2016? Do you think China will change its approach now and accept William Lai's offer to open dialogue with the Taiwanese government?
I think probably they would have a less ties with Taiwan economically, and probably also dialogue-wise. I think probably we will, although this is more or less the status quo, but I think Chinese probably may cut their ties, economic ties with Taiwan more in more areas. So that is basically back for the Taiwan overall economy. But I think this is more or less expected. So and also people probably expect Chinese economy itself is in a downturn. So more or less we will see less economic activities already. So that's what I think the market will expect. But for dialogue-wise, I think probably this would be getting a little bit worse.
So you don't see any sign of compromise at all between Taiwan and China here? You just think it's going to continue along the same path and maybe get worse?
Yeah, maybe getting a little bit worse, but I'm not too pessimistic. So probably we would be going through like we have been going through in the last 8 years. So basically more or less the same.
John, what are your thoughts? Do you see any room for compromise at all here between the two sides? Because what China's done so far hasn't really worked out, has it? It's tried coercion, it's tried economic incentives, it's tried reducing economic ties, it's done all sorts of things, but none of them have really worked.
No, indeed. I think they may. They'll probably try and talk more with the opposite. Well, the largest party in the parliament, namely KMT. So presumably they'll have more contact with those people rather than the actual president's office. And I think the person who's going to be the Speaker of the House, I think that also seems to be an important issue. If it's someone who's perceived to be reasonably China friendly, then that might help.
It might be a way, might it, for them to bring in the third party there, the Taiwan People's Party, and give them a senior position, because they're going to need their votes, aren't they, to get anything done. So maybe that would then make them also have to take some responsibility for what goes on.
Yeah, and the president's already said he's going to invite some people from the opposition parties into the government, into the cabinet. How he handles that is going to be a key factor, I think.
Alex, the Taiwanese markets did pretty well last year, didn't they? The TAIEX was up 24% overall in the year, one of the best performing markets in Asia and in the world. Why was that? Well, given that Taiwan is so dependent economically on the mainland, and the Chinese economy and Chinese markets haven't done anywhere near as well.
I think that this is the AI boom. This is just like Korea. Actually, Taiwan semiconductor industry is so important. So this is what's supporting the overall market. But if you look at domestic company, I think it is another story. So I think overall this is an export-oriented index. So that's why it's not affected too much.
Has Taiwan got to look for new areas of growth and develop economic ties elsewhere to try and reduce its dependency on the mainland? I mean, clearly it can't reduce it down to zero. It's always going to have a big influence, but does it need to be looking elsewhere, or is it looking elsewhere already?
I think it is looking to boost their advantage in the manufacturing sector. So that is what they have been doing. So they are quite good in the semi industry. So I think the point is they they improve themselves in its manufacturing technologies instead of looking for other markets. I think that's what their strategy is.
John, what's the way forward for Taiwan from here?
Yes, I think pretty much more of the same. Really, the strategic advantage they have with Taiwan Semiconductor and the rest of the complex is that's their main defense, long term, short term and long term. I think so. They will continue to try and keep their edge.
Okay, well, we're going to talk about Taiwan more later on this show. In the meantime, let's move on to some other things, because there's plenty of other stories this morning to discuss. China's exports rose more than expected in December, but failed to offset an overall decline last year amid a weakening global trade environment. The country's trade surplus was $823 billion for the year. Exports for all of 2023 were $3.4 trillion. That was down 4.6%, and it's the first annual drop since 2016. Imports also dropped 5.5%. In 2023, trade with the ASEAN bloc, which is China's largest trading partner as a whole, slipped almost 5%. And exports to the United States, they endured the steepest plunge in nearly 30 years, with total shipments falling by 13.1%. Compared to a year earlier, to just over $500 billion US. And data also indicates that China's about to lose its position as the top exporting nation to the US for the first time in 17 years. Alex, what do you make of this? What data? What's behind this?
Well, I think first of all, of course, this is what the manufacturers or the buyers actually are looking elsewhere to diversify their risk. And then I think that the overall trend of experience spending over actual goods spending also hurt a little bit on goods manufacturing. So I think both have some impact on these data. And I think the trend actually is there, and there's not likely to be worse. So we are likely to see Chinese manufacturing sector to remain a little bit in the downturn.
And of course, the United States has wanted this trade deficit to improve. That's what it's going to get, isn't it, by the looks of it?
Yeah, of course. I think it's very likely to see they are looking elsewhere to source the goods. So I think this is a trend that probably could continue, and the USA probably would like to see that. Yeah.
John, what do you read into this?
Yes, certainly nothing new. We've seen this trend developing over the last couple of years, really, and there's a point where China can't really expand its market share anyway, so it's really going to be dependent on overall global growth in trade, which is obviously soft, as to whether the China trade account can continue to expand in absolute terms, if not in relative terms. Yes, I mean the big success story, if you like, is this Mexico becoming now the main source of new investment in offshore, near shore manufacturing and so on. So Mexico's booming, and China's slipping back a bit.
And that's a long-term trend, do you think, as well?
Yeah, I think so. Yes, I don't think it's not. It's clearly there is a cyclical element, as I said, from the global global trade, the global economy, but underlying the trend is a long-term one. Yeah.
Alex, what about vehicles? That was the one outperformer. Shipments of automobiles jumped almost 70% in value terms and about 57% in volume terms, obviously driven by the rapidly growing EV market. China's established itself as an EV manufacturing hub. Although this wasn't enough to offset the weakness in other export categories. If it hadn't been for that, this data would have been far worse.
Yeah, I think EV probably will still be the booming sector. But of course, Europe and the US probably will try to do something on tariff to curb the trend, because they are too competitive. I think Chinese actually are too strong in that sector. I think the other parts of the world actually will be a little bit worried. So probably the EV may be good for some markets like the Middle East or Africa or some parts of Europe. But I think they will see some resistance going forward because the manufacturing in other parts of the world actually would like to see some resistance on that because Chinese actually are too strong in this sector particularly.
And it's not a very profitable business, is it, for many Chinese EV vehicles? Very cutthroat business. As we've seen last week, Tesla cutting its prices again for its EVs on the mainland. That's the one problem, isn't it, with all of this?
Yeah, that's the problem because the margin actually is so thin, and then the competition is still very strong within China. So they are selling it at a very thin margin. So that's why the profit actually may not be too good, even though their products are good and the price actually are very competitive. But I think overall profit actually will not be that strong.
John, are you surprised that some of the European EV makers like Volvo, like others, just don't seem to be able to compete in the Chinese market?
Yeah, because I think, first of all, they have the cost disadvantage. And then they are not. They do not have the early entrance advantage as well, not like Tesla. So I think that's why they are seeing very strong threats from Chinese competitors.
John, are you surprised?
No, it's very difficult for the incumbents with their legacy products to really go all out, or has been proved to really go all out in the EV sector, which partly explains why Tesla's been so successful. From a standing start, whereas General Motors and Ford and so on are still. As well in the US as well as the Europeans are finding it difficult to know where to place their bets really. I think an interesting example is what's happened in Japan with Toyota, who've actually taken the slightly opposite, slightly contrarian view and said, well, actually, hybrid is really what most people want at the moment. That's where the demand is. So Toyota have been pretty successy. But yes, the situation in China where we've seen it in many other industries where the overcapacity just is allowed to develop or is enabled to develop, but because the cost of capital is too low, they can get access to bank loans or whatever more or less freely, and so you have. How many is it? 200 different firms manufacturing EVs in China. I mean, it's chaotic in a sense.
So it's not really the Chinese governments that's subsidizing these EV manufacturers, it's the markets.
Yes, in fact, yeah. And that's why one of the reasons why the stock markets is so weak.
Well, also we had some consumer price data as well from the mainland. The country recorded an inflation rate of minus 0.3% compared with minus 0.5% in November. It's also a softer fall compared with the 0.4% expected by economists. Still, China's consumer prices down for the third straight month. China's economy was hit by deflation in July, and prices have since then been flat or fallen in every month except August. Alex, what's it going to take to get China out of deflation?
Well, I think it's very difficult right now because the spiral actually has begun. And then Chinese brand actually, as we have discussed earlier, that they like to cut price to compete. And I think this round of price cut competition actually has started. So fairly likely we will continue to see the deflation. And then the overall expectations of the economy actually is quite bad because of the property market. So I think those retail operators actually are likely to pressure the price to remain competitive. So I think the deflation expectation actually is built in. So this is very unlikely to reverse.
And economists have been talking about the government needing to act, otherwise it's going to fall into a negative spiral. From what you just said, it sounds like you think it already has started to fall into this negative spiral.
Yeah, because I think the world actually is in a natural deflationary force because of the advance in technologies, and also in China, there are so many competitions within every sector. So that's why I think this is already in a downward spiral, and that is very unlikely to change.
John, how serious is that?
Yeah, it's very serious. I totally agree with that, Alex. Just what I mean, we see it now almost every day. The new data tells us that in every sector across the board, it's becoming self-reinforcing almost. The problem of debt. I see the debt figures are still going up. Quite a lot. So I mean, they can't just keep trying to push out more loans and so on. And they're being targeted in the wrong direction anyway, or being targeted to manufacturing and infrastructure. We've got plenty of infrastructure and we've got plenty of fixed assets in the manufacturing sector. They've got to try and revive consumer demand. It's a demand side problem, not a supply side problem. And all the measures so far are basically towards increasing supply rather than increasing demand. So
at the cost of increasing debt as well, isn't it? Because it looks like China's debt to GDP ratio is heading for about 300%.
Yes, that's what I'm saying. Yeah, that particular figure is also worrying. So the deleveraging hasn't really started, although it's I see one or two signs where a couple of bankruptcies and restructurings have been approved by the courts. That's a bit of a start, but that also has got to until we see what happens with the likes of Evergrande. That issue is also looming large.
Okay. Alex, just before we finish, can I get your thoughts on the markets? The highlight really, or the story of Asian markets since the beginning of the year. Japanese stocks continuing to rally. They're at a new 33-year high. The Nikkei up over 6%, almost 7% last week. Indian markets are at a new record high, but the CSI 300 on the mainland down at a near a five-year low. This is just continuing the trend, really, isn't it, that we saw in 2022? What do you think is the outlook?
I think just stick with the trend. Japan and India probably would continue to have a strong momentum, especially Japan. Japan has been in a very huge consolidation for quite some time, and we just seen the breakout after the new year. So very likely, I think Japan would still be quite bullish. And then the India actually is still a demographic story, and I think people like that. And for Chinese, I think it is very likely to underperform. We have Baidu just down around 7 to 8% on last Friday. Again, a single day decline on basically nothing new. So I think this is still hurting the investor sentiment because it still look very risky to buy individual Chinese stocks. And overall, I think people are expecting a weak demographic situation and high debt, and also deflationary problem. These 3D elements actually would continue to pressure Chinese markets.
So until those forces are reversed, despite the fact that Chinese stocks must surely be looking very, very cheap now, you're not going to see any signs of a turnaround, or you're not forecasting any turnaround?
Yeah, I think right now the latest problem is the worry of price cut competitions within consumption sector. Mm-hmm. So if we are seeing that kind of price cuts, that means we are seeing probably a huge decline in profits from those retailers. So that's why I think it's still too risky. Although it looks cheap, but if this is calculated on the old number. If the margin being cut by a huge amount, then that means they are not that cheap as actually. So I think this kind of worry would still be there because of deflationary expectations.
John, are you tempted to take a contrarian view at all?
Afraid not, at least not yet. Hopefully something will happen, maybe later this year that will cause, some sort of inflection point. But there are so many issues out there. You need a sort of decisive game-changing event of some kind to change sentiment. The opposite of which we're now seeing in Japan, where finally, of course, it partly to do with positioning and fund flows. Suddenly, the whole world has cottoned on to the fact that the Japanese market is the place to be. So again, that's a self-reinforcing rise rather than decline. But it's quite ironic to look at the charts and you see the Nikkei climbing at a 45-degree angle and the CSI 300 whatever declining at the same sort of angle.
And the two are clearly connected.
Yeah. Yes, we're seeing the launch of funds in Europe and the US, which are specifically Asia ex-China and emerging markets ex-China. So series of announcements from chief investment officers and US pension funds, how they're allocating less to China or pulling out of China. And that trend has also been going on, of course, for most of the last year. But we come into a new year and those trends tend to get accelerated or extrapolated, at least in the early the early moves by investors.
Well, thank you both very much for your thoughts this morning. Great to hear your views, and have a great week. You heard there John Schofield, who is Managing Director of Tempus Investments, Alex Wong, who is Director of Alex KY Wong Asset Management. I'm joined now by Yanan Wu, who is the Chairman and CEO of Surfin Group, which is headquartered in Singapore. Morning, Yanan.
Good morning, Peter. Happy New Year.
And Happy New Year to you too. Let's start over in Taiwan with the election there. As we heard earlier in the show, Taiwanese voters have chosen the DPP's William Lai as their president. He won an unprecedented third consecutive presidential term for his party with about 40% of the vote. But the DPP lost its majority in the island's legislature, with the opposition gaining ground there, although no one party won overall control of parliament. Yanan, how significant is this election, both for Taiwan and also for China and the US as well?
Yeah, I think this election, the message is clear. First, the power come to balance. As just mentioned, the parliament legislature has 3 parties, and DPP lost first time the majority has to control 57 seats. So Democratic Progressive Party control 51 seats, and Kuomintang win 52 seats, the larger party in the parliament and legislature. And we can see the TPP also won 8 seats. And so I think that's the first message. The second message, of course, the TPP represent the middle part of the electoral votes, especially the younger generation, the Gen Z. So we see Mr. Ko Wen-je, the TPP Taiwan People's Party leader, very approachable among the Gen Z and young people, and a very good image. So that shows the middle stream, the younger generation, trying to make a voice in the political progress, the environment in Taiwan. And so I think this will be interesting phenomenon for the first time. that the younger generation want to make a voice, in the political stage. So that we could continue to monitor and watch and see how that evolves. The third message, of course, Mr. William Lai, the Democratic Progressive Party, won the election. First time since independent election started in 1996, won a consecutive 3 terms. The first party who can win beyond 2 terms. So that's also show it still have the majority in the Taiwanese in the elections environment. And also Mr. William Tai is also grassrooted compared to Ms. Tsai Ing-wen, who is more is from establishment or the so-called political elites from the last generation. The Mr. William Lai and Xiao Mei-chin, his vice, presidential partner, also both very, principle-driven and also very grassroots. So they may make more radical probably moves compared to Ms. Tsai from the last generation, who is more from the establishment. So that's 3 message. I think I would say mixed, but also very clear from this election.
And how has China reacted to the messages from this election?
Yeah, I think China also, Taiwan Affairs Office make a very clear statement. Of course, trying to, to contain any, message for pro-independence. Especially Mr. Lai seems a very approachable person, even less approachable than Mr. Tsai from the last leadership. So as I just mentioned, it's from the grassroots, from the street, smart sort of. So it may take unconventional cards. So I think the mainland government is very cautious for any move from the new leadership, and also give a very clear message. That the unification is still the only solution, and also has to show a very strong message from the military part. But we also want to see, Chinese military senior official leader met with the U.S. counterparts just prior to election in Washington, in Pentagon. So both sides, both China and U.S., want to have a common consensus, keep the current status quo is probably the beneficial for the both streets, the 2 sides from the streets, and also for the world. So that's why I think President Biden also said, it doesn't support independence for Taiwan.
In his acceptance speech, William Lai was quite conciliatory, wasn't he? He said he was open to dialogue with the Chinese government, the mainland Chinese government, and he felt that was the best way forward and will be a sort of a win-win for both sides. Do you think Beijing will accept that offer and maybe change its approach? Because since the DPP came to power, Beijing's refused to really, has cut all communications with Taiwan's government. Do you think maybe it will change its approach now, given the message from this election and William Lai's offer to open dialogue?
Yeah, I guess for any political leaders, it's really probably they talk in one way prior to election, and what they do is more important after they're taking the leadership. So that's probably the same for any political leaders. So William Tai, I think, shows a rather less confrontational stance after election. He said only dialogue and exchange can reduce the risk of conflict, like just mentioned. And he also said we must replace encirclement with exchanges and confrontation with dialogue in order to achieve peace and prosperity. So I think that at least show a good gesture from his side. So I think for the mainland government has to probably to analyze what his action policies and also the moves, whether the DPP really interested in dialogue or want to promote further exchanges between the two sides of the strict. Because especially the economic benefit for after mainland market open to Taiwan, so Taiwan beneficial a lot, whether it's from agriculture or semiconductor, the high tech. In production chain. So that's the economic benefit. So I think for the interest of Taiwanese economy, how to maintain a dialogue and also keep the dialogue door open is very essential. Otherwise, probably the both sides can, be hurt by the economic, sanctions or any, encirclement. So I think that's we have to monitor that. Yeah.
Okay. Let me ask you about China's economy, because we've had quite a bit of data out at the end of last week. First of all, on the trade front, Chinese exports, they rose more than expected in December, but they didn't offset the overall decline in 2023. What was really stood out from this data was exports to the United States, the steepest plunge in nearly 30 years. Shipments fell over 13% compared to a year earlier. Is that a long-term trend, do you think, now?
Yeah. The exports is probably the one area that's most hurt in 2023 for China in terms of GDP contribution. As you just indicate, U.S. Probably from the U.S. side, China is about to lose its position as a U.S. top export nation to U.S. for the first time in 17 years. And overall, for China, the exports for all of the year, was U.S. $3.4 trillion U.S. dollar, and that's further down, 4.6% from 2022, and that's the first annual drop since 2016. The imports also dropped, 5.5% 2023. So especially the trade with ASEAN bloc, the ASEAN region, China's largest trading partner for the last 3 years as a whole, slipped 4.9% year on year. And so that's also a very soft tone for China's export. So I think overall the global demand, reduced after the U.S. hike rate. So that suppress, domestic demand in developed nations and also in other developing nations. So that's, affect China's exports. Secondly, the production chain were forced to, move outside China. After U.S. sanctioned trade, policies such as nearshore and friendly shore policies, so that forced some production move out of China. So I think both these factors contribute a softer tone for China's exports. For China's GDP, the investment, the three so-called trio cars, the investment led, activities was softer because the property market is still in a cooling down period. And also domestic consumption seems, have not been revived, although it has improved quite a significantly compared to 2022, but hasn't recovered, to the 2019 prior to COVID level. So I think from that aspect, exports slipping, contribute to more or affect more on Chinese GDP. Yeah.
And of course, the other problem is that China is still in deflation. It recorded an inflation rate of minus 0.3% from the month earlier. China's economy has been hit by deflation in July, and prices have been flat or falling every month apart from August. How big a problem is this?
Yeah, domestically, China is, under this, big deflationary pressure. You just mentioned about CPI. The CPI is it was minus 0.3% in December, and that's fell for third straight month. So 3 months in a row, CPI was in negative territory since, and that's the longest streak of decline since 2009. After the 2008 global financial crisis. So that's extending more deflationary pressure, especially for PPI. PPI has been, was minus 3% for the whole year 2023, and that's 15 months negative territory for PPI. So, and both CPI and PPI has been negative for the past 3 months. So I think whether it's from a consumer side and or from the manufacturing side, that shows the demand is really, social demand is really not sufficient to support to hedge the deflationary pressure. So I think that's one thing is about the consumer desire has not been back yet. So there still, we heard about laying off in some sectors, and also the property market hurting the wealth allocation for the consumer side. So they tend to save more and even pay back mortgage if they have excess cash, try to reduce leverage from household side. And secondly, from manufacturing side, we can see PMI, the national PMI was also 49.0 and still in the contraction mode in December. So I think manufacturing side is still showing the demand from the production side is also on the weak side. And especially if you look at the inventory data for the manufacturing sector, the inventory is still decreasing in December. So that shows the economy is still in the destocking mode rather than restocking. So I think that's also showed the weak demand.
Is there a risk that
production?
Sorry, is there a risk that China's going to fall into a deflationary spiral like Japan did back at the beginning of the 1990s, or has it already started to fall into that spiral?
Yeah, indeed, that's a concern from many economists and also from the industrial side. So how do you bring down the deflation pressure, and how to revive the confidence is probably more important now. That's why I think the government issued 1 trillion RMB, the special bonds, trying to inject more cash. And just recently, last month, the PSL, from the People's Bank of China, PBOC, about 300 billion, 350 billion, also action to inject more cash, trying to let the economic system have more liquidity, just bring in more liquidity to reduce this deflation pressure. But I think that relatively speaking, that we need to take a long-term approach because one is the aging society. Secondly, all the demand side has to be, bring back more confidence from the consumer and also from the private enterprise. So I think that's relatively longer term, especially for the global demand. Whether this is demand can bring back after U.S. hike rating cycle is also another external factor. So both domestically, internally, and also global demand from externally has to both, to bring down this deflation pressure overall.
Okay.
Yeah.
Well, Yanan, it's always a pleasure to talk with you. Thank you very much indeed for your insights this morning.
Thank you, Peter.
That's Yanan Wu, who's the chairman and CEO of Surfin Group, which is headquartered in Singapore.
Peter Lewis's Money Talk.
I'm joined now by Ross Feingold, who is Director of Caerus Consulting Research over in Taipei. Morning, Ross.
Good morning.
Let me get your thoughts first of all on the Taiwanese election. Of course, I mean, one thing that really stood out actually on the election over the weekend is Taiwan may be one of the youngest democracies in the world, but it knows how to organise an election, doesn't it? It really was a very smooth, incredibly effective process. Everyone who wanted to vote got to vote. The count was transparent and fast, and the candidates, the losing candidates, all conceded very quickly without any problems. There's a few lessons for other parts of the world there.
And they did that all with paper ballots, not a very high-tech method of voting. But they have an election for various levels of government here, and there's a lot of experience with holding elections. There was even a polling station in an MTR station here in Taipei, which I was quite surprised to see, but making it efficient for the eligible voters to come out and vote.
Okay, well, let's talk about the results. As we know, William Lai is president-elect. The DPP won a third consecutive term, but they lost control of the legislature. So how big a problem is that for them?
Well, in a word, that's going to be chaos because he won't have a majority. So not only will it be difficult for the executive branch to get any new laws approved or revisions to existing laws through the Legislative Yuan, which is the formal name of the parliament here, but also they could call in the ministers for interpellation sessions and make their life very difficult, kind of like question time over in the UK. I expect to see a lot of chaos, as I said, a lot of hijinks, a lot of grandstanding by members of the two opposition parties that combined have a larger number of seats than the DPP has. And just back to Lai's victory, we have to keep in mind that he only won because it's a first past the post system. There's no second round. There's no runoff. So he won with 40%. So 60%, which was split between two opposition candidates, but 60% did not vote for Lai. So he's going to become president with only 40%. That's not really what I would be comfortable calling a mandate. It might be a man or it might be a date, but it's not a mandate.
And it makes you wonder then, presumably, what would have happened had the KMT and the smaller TPP actually done this deal that they were talking about last year to go and run on a joint ticket. It could have been a very different result, presumably.
I think everyone assumes that it wouldn't be 60-40. It would have been a lot closer, but all indication is that a joint opposition ticket would have been victorious. But they couldn't make a deal, and now we're going to have President Lai for 4 years.
And is there a way in which the TPP could be brought on board here to help the DPP? Is there some way in which maybe they could be given some senior positions in the government or in the legislature and try and bring them into the fold?
There's been a lot of speculation about that. A lot of speculation about that since Saturday night. I think it's very unlikely, and even if it happens, it will probably fall apart within a short period of time. There's a lot of bad blood between Ko Wen-je, the chairman of the Taiwan People's Party who ran for president, and the Democratic Progressive Party. They endorsed him for Taipei mayor in 2014. They did not endorse him when he ran for re-election in 2018. And the DPP and its army of online warriors or friendly media to the DPP, they've been merciless in their criticism of Ko Wen-je over the past few years. So I think it would be very, very difficult to bring the TPP into government. And the trade-off there would have to be TPP support in the parliament. And I just don't see that as really something that could be sustained.
And what is the message from the voters here? People have been talking about, this sends a signal that there's a long-term decline in sort of perceived kinship with China, if you like. How do you see the message from the voters here?
I think voters were kind of frustrated by this election because, again, we had a desire. It's pretty clear there was a desire by a majority not to reelect the DPP, but the majority couldn't make a deal. The opposition failed to reach a deal on a joint ticket. And that frustration will continue because the president was elected with only 40% of the vote. When it comes to China issues, I think, again, 40%, they want the hard line. We're not really going to look to talk to China for the sake of talking. We're not going to agree to the so-called 1992 consensus under which each side says there's one China, but the mainland calls it People's Republic of China and Taiwan calls it the Republic of China. The Kuomintang, had they won, or the TPP, probably would have looked to resurrect some level of dialogue with China. And again, it seems that the majority would have been okay for that. With that, the majority was not for lie. But that's what we're going to get. We're going to get Tsai Ing-wen 3.0, as some people call it, when it comes to China policy.
But William Lai, he did make quite a conciliatory acceptance speech, didn't he, towards China? He held out an olive branch. He was saying that, he would love to have dialogue with China, and he was open to that. How does China react to that?
Yeah, it's a fair point, and a lot of people noticed the conciliatory remarks towards China. But ultimately, and China's reaction to this, it comes down to this so-called 92 consensus. And if a Lai administration is not going to have the 92 consensus as the basis of its China policy, then China is not going to talk to him. And not only will China not talk to him, but we're going to see a lot of the same things that China has done the last 8 years to put pressure on Taiwan. Military exercises, some trade retaliatory measures, possibly persuading countries that still have diplomatic relations with Taiwan to switch those relations to China, and keeping Taiwan out of international organizations.
But the problem is none of that has worked, really, has it, for China out in the past 8 years? Taiwan has resisted all of that. Taiwanese voters, despite everything that China has said and done, has sort of turned to the DPP.
And that's why looking at this from China's perspective, they don't renounce the use of force to bring about unification. They don't say, this will only be a peaceful process to unify. They say they want it to be a peaceful process, but they don't renounce the use of force. And I think that's why, they say other things haven't worked. Military pressure hasn't worked. Having better relations for 8 years when President Ma was in office, that really hasn't caused people in Taiwan to eagerly want to unify with China either. That's why they still have the option to use the military to force unification. And as I like to say, people here in Taiwan, whether that's the civilian leadership, the military leadership, or the corporate world leadership, they have to take that threat very seriously.
But presumably China also has to think very carefully about whether it wants to go down that route, because the costs for China would be pretty catastrophic as well. Surely they wouldn't want to go down the route of war, would they, over this?
I don't think it's imminent, but again, they retain this option. And not only is that a verbal statement that they retain the option, they're obviously investing massive amounts of money in military as well as defense R&D, practicing amphibious landings, et cetera, et cetera. So they are preparing for it. So they clearly, they mean it when they say we don't exclude it. So again, maybe it's not something that's imminent, but if we go through a few more elections where the DPP continues to win, then it might become more imminent.
So how do you see relations between Taiwan and China developing now? Are we going to have a period of calm, or do you think we should need to prepare for some a more turbulent phase in relationships across the Taiwan Straits?
Well, if there's going to be more turbulent times as opposed to calm times, there's probably going to be some trigger actions that cause that. I'll give you an example. If Taiwan's outgoing president transits the U.S. again, or after May 20th, if William Lai transits the U.S. and he meets prominent politicians, or if prominent politicians from the U.S., like the Speaker of the House, visit us here in Taiwan again, that would be a trigger point. If a Trump administration is elected again this November in the U.S., I think a Trump foreign policy or a Trump China team, they're going to give Taiwan a lot more leeway to do things that might annoy China, whereas I think the Biden administration, they give Taiwan less leeway than a Trump administration would. I'll give you a simple example. Taiwan's representative office in Washington, D.C., as in many places around the world, is called the Taipei Economic and Cultural Representative Office. Taiwan wants to change that to be the Taiwan Economic and Cultural Representative Office. The Trump administration might very well do that, and then there would be a harsh reaction from China.
And what about this US delegation that's heading towards Taiwan right now? I'm not sure, maybe they've even arrived, but is that likely to be a trigger point for China?
Probably not, because these are all former somethings. They are people who previously served in government but are not in government right now. And Biden has sent this kind of delegation to Taiwan every year since the Biden administration took office. So we're used to seeing this. And I think the fact that they're all former somethings, they're not currently in government, it probably means China will make some angry statements, but not necessarily take any action specifically in response to this delegation.
And what does this mean then for US-China relations going forward?
Well, the Biden administration seemed to have wanted to make some positive changes in the relationship, and we've seen that in the months after they met in San Francisco on the sidelines of the APEC summit. But again, if there's any actions that the Biden administration takes that anger China, then China will just simply cut off some of those bilateral dialogue mechanisms. And it's clear the Biden administration doesn't want that to happen. That's why I say the Biden administration, they give Taiwan some leeway, but not as much leeway as a Trump administration would give Taiwan.
And going forward, what does Taiwan do now? Clearly, it can't totally cut itself off from mainland China economically. Its economy is tied in with the mainland, but at the same time, it is already trying to find new markets, isn't it? New areas of business. Does it continue down that path?
Sure. The mainland is the largest export market for Taiwan at the moment, and it's very difficult to change that in a material way. But what we have seen, and something investors should be looking at or talking to Taiwan companies about, as you mentioned, some expansion in India, and that's in response to Apple's demand to Foxconn and the supply chain to manufacture more handsets in India. And we've also seen the U.S. pressure for reshoring or friendshoring, and the highlight example of that is TSMC building its fabs in Arizona. But TSMC is also building in Japan. They're also building in Germany. So one thing to watch would be how much pressure from the United States, Japan, or Europe is made on the Taiwan government or Taiwan industry, especially the high-tech industry, to diversify manufacturing locations. We're almost at capacity for building these kinds of facilities here in Taiwan. We do have a land shortage. So then the option becomes the United States, Japan, or Europe. We're going to see some more of that in the coming years.
And William Lai did specifically mention Taiwan's semiconductor sector, didn't he? He said he was going to continue to assist the sector. He said China and other countries must also cherish Taiwan's role in the global chip industry.
Yeah, but I don't think that's going to matter much when China feels that they have to respond to things like a House of Representatives speaker visiting Taiwan or any formal actions that change the name or the constitution of Taiwan. I mean, the fact that the semiconductor industry is here is not going to stop China if and when China feels that Taiwan has crossed a red line.
Ross, thank you very much. Good to hear your insights on that. That's Ross Feingold, who is Director of Caerus Consulting Research over in Taiwan.
You're listening to Peter Lewis's Money Talk. Money
Talk.
Thank you for listening to Money Talk this morning. You can find more details about some of the topics I've been talking about today, along with information on other headlines and market moves in my daily newsletter. Take a look at peterlewismoneytalk.substack.com. I'll be back with another show tomorrow. Joining me then will be Mark Michelson, Chairman of the Asia CEO Forum at IMA Asia, Will Denyer, US economist at Gavekal, and our US correspondent, writer and broadcaster Barry Wood. See you tomorrow.
Money Talk